Hello everyone again, welcome to a new weekly analysis for the 16th November 2020. This is the trading disclaimer. You can pause the video and read it at any time. Okay, let's start with dollar index. This week we have many unclear scenarios like the previous week, probably due to the US elections and all that, but price action on the dollar index and many euro and pound cross pairs is very unclear. So staying away, waiting for something more clear to show up. But I'm going to do the analysis anyway, as always. We have 3 months area supply in control together with the monthly. Brand new area supply where shorts will be possible again. And now the weekly area of demand is under attack. We have like several bearish engulfing patterns. This could be eliminated, but it hasn't happened yet. We have very bad price action there with imbalance tested on departure, fully penetrated. So very, very unclear, this one. So waiting for something more clear. On the euro dollar, we have same scenario, but upside down. Same bad price action based in structure up there. We have these two bullish engulfing patterns attacking this weak area of supply. We need new areas of supply in order to go short against this bullish impulse. We have the bearish engulfing pattern, but these areas of supply, this one over here, is poor. So we need, again, something clear. And the same happens with most Aussie cross pairs. Price is trying to reach this 3 months area of supply after eliminating these two areas of supply. We are expecting price to drop further, but now look at the monthly price action. The bullish impulse is stronger than the bearish one, so no shorts. We cannot set and forget. And look at the strength of this price action and the weakness of this high wave candle. So we've got the body, very tight body, and look at the upper and lower wicks. If we didn't have that candle there, just delete it from there and merge these two like that, then we would have a very strong area of demand and we could try to go long aggressively. But the departure is very bad because we've got one and then we've got this high wave candle, so not good. Again, price action on the 4 hour is poor, very poor. And we can say the same thing on the Aussie CAD. We have the bullish impulse being stronger. I mean, the open is higher than the close right now on the monthly. Still 2 weeks left, so it's higher, slightly higher than the open. So we have the weekly price action, the monthly price action at balance, and the bullish price action could do it like that. This is a weak area of supply, very weak. So doing nothing and clear price action, waiting for a clearer price action. In the 3 month sequence, we have 3 months area supply and control. We need new areas of supply in the weekly in order to go short, but we have it, yeah. But look at it's very, very poor. So we need something stronger. Aussie yen, same thing. We were expecting price to retrace after this strong rally. We had the bearish engulfing pattern, but now we have a bullish engulfing pattern. This is not the kind of price action we want to see. And this is very similar to other cross pairs like the one on Aussie CAD and Aussie dollar. Doing nothing on this one. Yes, waiting and waiting and waiting. Nothing to do with the clear price action there is on the major world indexes and hundreds of stocks. I mean, that's why you have to diversify. If you are a forex trader, you also have to have other assets you can trade, like stocks or bonds or ETFs, indexes, commodities, and all that. Because when the Aussie is showing this bad price action, it is doing it on most Aussie cross pairs. You can see, look at the red circle, the price action surrounding it. It's the same thing. They are highly correlated. So in the end, you've got like 4 majors here. There are no majors, but the ones more heavily traded. And all of them are doing the same. And when you look at the euro, same thing happens on most of them. So once the main currency is of the cross pairs doing nothing or is unclear, then it's going to sort of negate a block, a group of cross pairs. So that doesn't happen with stocks, that's for sure. And you can trade stocks no matter how much money you have, because you can buy single shares. So you can even buy Apple stock, because Apple, or even Netflix, Apple is like $119 per share, so that's affordable. Okay, one share. Okay, so Aussie Kiwi, again, unclear price action. We have this weak area of demand. Why weak area of demand? Because it was made of one ERC basing structure and then three ERCs. So we could not set and forget down there. So we have that area eliminated. We were saying we were not trading this one last week. So why? Because of that, price dropped, bearishing of the button, so no longs allowed. Longs will be possible again down there if we get new areas of demand and all that. Let me see, look at the weekly down there. I mean, we are expecting, if price drops down there, it is going to react almost for sure. So down there and short on the way down, but price action is unclear again. On the CAD yen, we have the monthly downtrend, short bias. We have the weekly out of alignment, deeper penetration happened, and look at the strength of this bearish pink candle. We don't want to trade here at this daily area of demand. So ideally, we want the weekly out of alignment with new areas of demand, but this price action, even if we had demand here, it would score low because we have this bearish pink candle. So like again, monthly downtrend. So maybe price will react from there, but this is a very risky trade given the picture of the weekly time frame. Confirmation for longs instead. Euro Aussie long bias, we have the monthly area of demand. This bearish candle here doesn't look good. We need areas of demand in order to go long. We have one down there on the daily, but it scores low, only one ERC, and this ERC is not wider than the average. This is the average ERC, like that one here. Okay, this is the average. It's very common on the Euro Aussie to happen. So this one is a common ERC. So if we had something, an ERC, imagine something like that. Imagine this ERC filled in green. Okay, one single. That would be great. Why? Because it's much wider than the average. The weekly is out of alignment, new area of supply is being created extreme, so this is very unclear with used up area of demand here, tested several times, 1, 2, 3, probably a fourth time is going to happen. So again, like I said, another unclear scenario. On the EuroCAD, another unclear scenario. It almost reached this weekly area of demand, pink candle, so if anything, longs, but take a look at this. We've got out of alignment, the 3 months, out of alignment monthly, the weekly, and the daily. Every single time frame is out of alignment. Though that's very tricky. We need at least one time frame to lean on. So let's say you are leaning on the monthly sequence. Is the monthly an uptrend? No, it is not. So let's take a look at the weekly. For the weekly sequence, for entries on the 4 hour, the weekly is in a downtrend or an uptrend? No, it's consolidating, it's out of alignment. So again, the same thing. The daily, also out of alignment for lower time frame entries. It is very tricky to trade like this. At least you need one time frame, the top one telling us, okay, the weekly's up, great, let's go long. Look for near longs opportunities. But it is not the case. And neither is for the Euro Aussie daily chart, the Euro CAD or the monthly. So it could drop all the way down there. So, but I must say that this 4 hour is super strong, very, very strong, and it is nested at proximal line of the daily. So if you want to take a risk on this one, I wouldn't, because like I said, I want at least the top time frame of a sequence. If I trade in the weekly, I want it to be up, bullish or the monthly bullish, and it is not. We have bullish impulses, but that's not enough. So if anything, longs, but like I said, do nothing. Euro pound. This one, we wanted to go long at this area of demand on the daily and the weekly. Price has been overshot. So if you happen to be long on this one, you are on a winning trade. You should have the stop loss like 25% underneath this area. It looks like it's going to continue dropping. So you should adjust your stop loss aggressively because we've got a brand new area of supply attacking that area, responsible for eliminating that one overshot. So if you are in this trade, manage your stop loss aggressively. Do not let this trade become a loss. It shouldn't be a loss, okay? Because you should not have placed your stop loss at this line. Rules say 25%. So divide the zone in 4. So that is the distance we should have the stop loss at, like around there, approximately. You need to do the calculations. Euro yen. Long to be possible again at the monthly area of demand. Bullish price action, stronger than the bearish one. Used up area of supply. It could continue to rally. Let's see. If anything, longs on this one because we have the weekly area of demand, but this is a very tricky price action as well. So if anything, longs, but it wouldn't be on my trading plan to trade this one. Why? Because we have the monthly out of alignment, 3 months out of alignment, weekly out of alignment, daily out of alignment. Not a single trending market or time frame. We want at least one to consider that time frame the top of our sequence and follow that bias. So that's how it works. Like I said, Euro NOK. Euro versus Norwegian krone. Monthly uptrend, demand in control. Weekly uptrend, weekly out of alignment now. Weekly price almost reached the weekly area of demand. Longs if new areas of demand are created, but we have this area of supply in control on both the daily and the 4 hour. Waiting. Euro Kiwi, monthly area of demand was tested. Bigger penetration has happened. The weekly is in a downtrend. Confirmation was needed on this one. As explained in previous analysis, it did not happen and it continued to drop. Bearish impulse did not consolidate away, so we cannot go short over there. Like I said, tricky scenario. Why? Because you want to go short. You have the weekly area of demand in control. And also on the weekly sequence. Weekly is down, so this would be counter-trend. On the monthly, we have the monthly uptrend, demand in control. So we want new areas of demand on the daily. Are there any? No. So, nothing. Pound dollar. This is another example, as explained previous week, of a level that was overshot, slightly overshot, like the one that I showed recently on the euro pound, also related to the pound. So it was overshot, so you should be on the trade, manage aggressively, and the same thing happened on this area of demand explained in previous analysis last week. Some of you are long this one. It already made more than 3 to 1, almost eliminated that area of supply. Weekly uptrend, demand almost to control, bullish impulses, so long bias. On the monthly sequence, we need new areas of supply in order to go short because the monthly area of supply is tested. Do we have any areas of supply in the day? No, we don't. No, we don't. Because we have this area of supply over there. It is an existing area of supply. We need new areas of supply. And this 4 hour area of supply is poor. So, nothing. Pound Aussie. Well, look at the monthly. This is very unclear. Potential longs. Price did not retrace that counter-trend long over there as expected and continued to rally. Now the daily is out of alignment with a new area of supply in the daily. Short will be possible up there. Now we have, look at the price action on the weekly. This is a real mess. All this is tested area of supply, eliminated as expected, I mentioned in previous analysis, but then it reached this weekly area of supply, and now we are at a weak area of demand on the weekly. Why weak? Because it only has one ERC. So, very unclear again. Like I said, once the main currency, the base currency on the cross pair starts consolidating, it usually sort of all the other cross pairs are affected by it. It's like a contagion, it's like a virus affecting all of them. So it's gonna have all these cross pairs on the pound doing strange things, or price action is not going to be very clear. On the pound CAD, we have bullish price action, as you can see. As mentioned in previous analysis, this is unclear. Use up, expecting bigger penetration, bullish engulfing pattern. Then we have several engulfing patterns as well, and this daily area of demand with super strong area of demand on the 4-hour playing out. No retracement to this 4-hour area of demand. Now we have an uptrend on the 4-hour, connecting those two valleys. If anything, longs, but look how close this super strong area of supply it is, so don't expect too much for that. Pound yen, monthly downtrend, shorts and new areas of supply, not existing ones like this one. So now we have the weekly area supply with new areas of supply in order to go short, but look at the strength of that area, very poor. So price will probably do like that. This is a counter trading area of demand that could play out on the way up to that area. But like I said, unclear. Pound Kiwi, very close to the monthly area demand, no retracement yet. It didn't hit the proximal line. Now we have another bearish engulfing pattern, this one in the making. We have weekly area demand in control, we have daily area demand in control, so no shorts are allowed, only longs. But look at where we are, okay? This daily area demand is trying to rally, but look at this bearish impulse. I'm not trading Forex anymore, as you know, only stocks. This area of demand on the 4-hour, it scores high, but look what we have here. Our friend here, this is a super strong obstacle. I don't want to trade this little tiny area of demand strong, okay, against this. In a scenario where we have the weekly consolidating and the area of demand has already been tested. So like I said, this is not a clear scenario. If it is a clear scenario, then I will say it's super clear, great. But it is not clear. Kiwi dollar trying to break higher, and it did. So this is very similar to the Euro Aussie, bearish engulfing pattern, bullish engulfing pattern, and then what happens? We're expecting price to rally, and then that's what happens. This one is a better scenario than the euro dollar because we had the weekly in an uptrend and the weekly area demand was in control. So long bias, long and new areas of demand. We have this weekly area supply tested several times, expecting bigger penetration. Kiwi dollar, monthly now in an uptrend after eliminating that area of supply, and a higher high has been printed. So now we have this valley and we have another valley. So tested over there, expecting bigger penetration, which happened, no retracement to these areas of demand after eliminating that weekly area of supply. So monthly demand in control wins over area of supply on the weekly, lower time frame, weekly. Kiwi yen, we are expecting the same thing. Like I said, previous analysis, under attack. We had the bearish engulfing pattern over there, but look how poor the weekly area of supply was. So a new area of demand is being created over there. Strong areas on the daily and the 4-hour for longs aggressively against this tested area of supply, which probably we're going to have doing like this, and then we're going to have an uptrend and the trend line like that, and then probably we're going to have this weekly area of demand. That's sort of projecting what could happen in the next month, probably. On the dollar CAD, the monthly area demand was eliminated. Like I said in the previous analysis, we had this weekly area supply. The weekly was at balance. The bearish engulfing pattern, this was a bad area of demand. Basing structure departure was bad as well. So no longs were allowed. So we have now two areas of supply eliminated. I'm going to delete them for the sake of clarity for the next analysis. Weekly is in a downtrend, but price action here is super bad. So waiting and waiting again. So we're going to have, this is the second week where we have very bad price action, so probably we're going to have that for 2 more weeks, or unless we have these all the highs and lows from previous weeks eliminated. So on this one, dollar yen, we have the monthly average demand, but this is not a daily average demand. It didn't break anything. So waiting. Price action very bad here, no consolidation away. We have a super strong area of demand on the 4-hour with a bullish engulfing pattern. So what would I do if I was trading Forex? Nothing. But if you still are interested in trading this one, if anything, longs on this super strong area of demand. If anything, I wouldn't trade this one. Okay? But I know some of you are a little bit aggressive, or maybe you're gonna wait there for a reaction and all that, but I'm not trading this. I would have wanted a new area of demand on the daily. But let me see one sec, because I think I've made a mistake here. Because this is a daily area of demand, it's being eliminated right there. So this price action, this candlestick there, should be the area of demand. Yep. But price action and all that, we don't want a high wave candle at the basic structure. Okay. So that means that this daily area of supply is being eliminated, and for that reason, then we've got that daily area of supply over there. So we could do something like that. I'm going to clone this one, like I always do. And this is going to be colored in red. So that gives a little bit more odds to that type of trade, with a higher high printed above the bearish engulfing pattern. Unclear, still unclear, but if anything, like I said, I mean, this is the strongest impulse after this one, okay, which is in control now. Okay, this is the strongest one by far. And if we look back, then we're going to have another one like the 27th of August, super strong. So these are the three strongest levels. So we've got that one played out, that one's trying to, so this one could be tried. Okay. Swiss franc versus the dollar. Here we are. We were expecting price to rally all the way up to these areas, or this area of supply in the weekly, in order to go short, but just didn't. Now we've got a daily area of supply, daily in a downtrend, bad basing structure. So we can't go set and forget, short set and forget. So right now this could happen. This is very common to have the lows broken and then reversing. So longs if new areas of demand are created. Else shorts any areas of supply. On Chinese yuan versus the dollar, there is a lot of room for price to fill the bearish void on the way down to the monthly average demand. We were waiting for the retracement after eliminating the monthly average demand, but it didn't happen. Super strong average supply at the top, and nothing to prevent price from dropping. So if anything, short bias aggressively on the way down. There are no obstacles until all the way down. Indian rupee versus the dollar. We have the monthly in an uptrend. Let me do something. In an uptrend, we've got price at the middle of the range. There's a 20-MA confluence over there. Brand new area of demand on the weekly. It didn't retrace. It hit the weekly area of supply in consolidation, that nested area of supply in the daily, and now we have the daily in an uptrend. So once we have the weekly area of supply in control, we should not go long on this one. It's playing out, yes, but it is not a valid trade because of that. We want longs lower at the weekly area of demand. But when you look at the weekly area of demand, what do we have within? This is very bad price action. So we need new areas of demand on the 4-hour in order to go long. Norwegian krone versus the dollar. We have the monthly average demand in control, but then we've got the bearish engulfing pattern that would prevent us, as explained when price was before hitting this area of demand. This is not a valid trade because of that, explained in the previous analysis. Look at the arrival of the level, weak area of demand under attack. So this is unclear. We need new strong areas of demand in order to go long on this one. So this one was eliminated. So that one is supply. Singapore dollar versus the dollar. we have had these tested area of demand on the weekly, eliminated, weeklies in a downtrend, dailies in a downtrend, short in the weekly sequence, but nothing to go short at here. This is the price action from the US elections, this pink candle and all that. So if we had had a good basing structure, then yes, but it is not the case. So most dollar cross pairs are displaying this kind of bad price action. South African Rand, same thing here, the pink candle. We have price approaching this monthly area demand where longs would be possible again. In the weekly sequence, we have the weekly in the downtrend, shorts, and the average supply. And now the indexes, all of them have long bias. The S&P broke all-time highs again. Longs and EF demand. It's a pity that price did not retrace to this super strong area demand, and it did retrace to this poor area of demand, which is trying to break higher. Longs and EF demand. Nasdaq, aggressive longs and EF demand. Why aggressive? Because after a super strong rally, we are waiting for the retracement, and now we have the bullishing of the pattern with the tested area of supply under attack. Aggressive longs at daily average demand or just doing nothing. On the IT sector, the S&P looks better, and the Dow Jones and the Russell, all of them breaking all-time highs. As expected, Dow Jones broke all-time highs. I have been mentioning about this scenario for many months. So this area of supply has been eliminated as expected. Once price hit that area over there, coronavirus, price action and all that, we were saying no shorts, no shorts. We are expecting that to be eliminated, and that has just happened. So we have the monthly right now in an uptrend. Two valleys, come on, and one area of supply eliminated. New areas of demand being created on the daily and on the weekly, long bias. Russell, it also eliminated that area of supply. Monthly area of supply eliminated, weekly in an uptrend, demand in control, new areas of demand, long bias. DAX 30 expecting the all-time highs and this area of demand to be eliminated, and that's why we have many German stocks rallying very strongly. Bullishing of the pattern, expecting those areas to be eliminated, longs and EFs demand aggressively. This could be one. And there's another one at the bottom, which could be the result of a trend line break, which I haven't drawn. Long bias. FTSE, counter-trend longs, expecting price to rally all the way up there. So we have new areas of demand. A new area of demand on the weekly as well, which I didn't draw. This price action was poor, as explained in previous analysis. And I was saying that we were expecting price to rally, because after a super strong rally, sell-off, we are waiting for, we have to expect our correction. And we also have the 6 months area of demand in control, which is what we had on many other indexes like DAX and many Nifty, Nifty 50 and all that. So long bias on all indexes. Nikkei, as explained for several weeks and months, long bias, expecting that area of supply to be eliminated. It took several months for that to happen, like 5 months, and now we have brand new areas of demand for longs, expecting that area of supply to be eliminated with this super attack. Long bias. Australian index, new areas of demand for longs. I'm going to delete that one for all the ones. Filling the void. Finally, it took a few months for price to break above these highs. Longs on the way up, expecting that area of supply to be eliminated as well. Hang Seng Index, we have 6 months area of demand control. Weekly area of demand is also in control. New area of demand on the weekly, long bias. Tested several times, bigger penetration happening on the monthly, long bias. Nifty 50, all-time highs broken, new area of demand is being created. This one is not yet there. Just painted it, but we need consolidation away. And we have on the weekly sequence, the weekly is in an uptrend. New weekly area of demand has been created, and also on the daily. Bank Nifty, expecting price to reach that monthly area of supply and eliminated. Same way that happened on the Bank Nifty. So we have brand new area of demand on the weekly and the daily, long bias on this one. So this over here, this basic structure dropped, eliminated this while long. So if this is a daily over there, yeah, supply, then this is demand. That's the chain analysis. I'm going to delete some older areas because to make trading be a little bit faster. Also for the sake of clarity in the analysis. The less zones that you have on this chart, the better for you to make a trading decision and see price action. So I'm going to delete those already. They have been in the video analysis for months. And that's it. 10-year notes. Expecting price to drop all the way down to the 3 months and the monthly areas of demand. We have these daily areas of supply playing out. Short counter trend are possible right now. Let's see what happens. Gold doing nothing on this one. Why? Because we have the weekly area of supply and look at the price action. We don't want to trade within this mess. So even if we have new areas of demand and supply and all that, just forget about gold for some time. You need, and look at the strength of the impulse. So we are waiting for the retracement. The month is already losing steam. The weekly has the weekly area of supply. So right now, very, very unclear. We need new areas of supply, very strong. Ideally, we want the weekly area of demand out and all that. But if anything, right now, I was saying in the previous analysis a couple of weeks ago, longs are near of demand. But now we are again in the weekly area of supply with super strong area. If anything, right now, shorts. But remember, this is counter trend. You better focus on trend trading instead of counter trend. Natural gas expecting a bearish correction. No set and forget. But out there, expecting price to drop to the weekly area demand will long to be possible again. Bitcoin, super strong rally on the weekly, expecting a bigger correction. There is nothing to go short at, to go long at over there. This 4-hour area demand was to control, rally strongly, but this is very bad price action. We have this older area of supply in the daily there in control. Okay, after a very strong rally. So it is very aggressive now to think, okay, I'm going to buy Bitcoin super expensive. We have to wait for the retracement. And Brent trying to correct, and this is affecting crude oil as well. This is affecting most oil-related stocks. So, a rally. Bullish incompatibility being created, room to reach the monthly area of supply. So counter trend longs are possible on the way up. And that's everything, I believe. My friends, have a great weekend and stay safe. Bye-bye.